welcome to the Frontier Views webinar on the SSA Outlook for 2021. Will SSA markets lose steam as fiscal pressures mount and the COVID-19 vaccine rollout falters? I'm Mark McNamee, the Director for Europe, and I'll be moderating this webinar here today. Before we get started, very quickly, we want to give you some background information as we realize that some of you may be new to Frontier Views, so we'd like to take a minute to provide you with a very quick overview of our firm and how we work with executives and major multinationals. Frontier View provides the world's best market intelligence and advisory services for global business professionals. We help our clients grow and win in their most important markets by informing and empowering their market monitoring, planning, and execution of their critical decision processes. With continuous research and insights, custom solutions, and transaction support services, we provide our clients, a small sample of which you can see here, with timely, actionable insights to adapt and win in changing markets. If you're not a client, then please take a look at this slide, and if you're interested in receiving 60-day complimentary access to our Frontier View program, then please leave a comment in the chat box or email us at info@frontierview.com. And very briefly, before we go into the actual presentation, as part of our offering, we are excited to announce that we have launched a new mobile app. Frontier View Mobile, which is available on both iOS and Android, includes all of the relevant content you need to monitor your markets, including this webinar recording and presentation deck. We encourage you to download the app in order to have access to these insights and more at your fingertips. Current clients can access the mobile app using the same login information as our browser application. If you are not a client, you can still download the app and start monitoring up to 5 complementary countries and access other features like daily news and notifications. So with that, having briefly introduced our company, I'd like to move on to take a moment to introduce my co-presenters here. So for today's Frontier Views Associate Practice Leader for Sub-Saharan Africa Research, Matt Kindinger, who has been with us here at Frontier View for over 4 years now and is originally from South Africa and has an economics background, as well as we're joined by Daniel Sadamu, who is our analyst for Sub-Saharan Africa, who has been with us now for about a year and comes to us with background specifically in African banking and is originally from Nigeria. These two will be leading the presentation from here out. If there are any insights you see today as part of the discussion or any questions we don't get to answer, our client services team will be happy to follow up with you directly. And with that, I'd like to now turn things over to Matt to take us through our agenda. Matt?
Great, thank you very much, Mark, for the introductions. As Mark has said, I'm Matthew Kindinger, the Associate Practice Leader, and I'm looking forward to taking you through the outlook for Sub-Saharan Africa today. So before we begin, I'm just going to run you through what we're going to touch on today. So after the introductions, we're going to look at the meat of the outlook for Sub-Saharan Africa. We're going to be looking at some key takeaways that multinationals need to think about over the next year or so. We're then going to be looking at the global outlook and how that affects the demand and economic outlook for Sub-Saharan Africa. We'll be turning to some regional drivers that will include the COVID-19 response by governments, the vaccine rollout, as well as the political and security environment in Sub-Saharan Africa and how that will affect multinationals. And finally, we will be spending some time looking at the Sub-Saharan Africa growth and demand outlook, which countries, which sectors, which customer groups will be performing better or worse over the next 6 to 12 months, all with the idea of trying to answer the question of whether a very slow vaccine rollout and increasing fiscal pressure will affect the growth outlook for Sub-Saharan Africa. And we will finish off with about 5 to 10 minutes with question and answers at the end of the session. Fantastic. So I'm going to get started with some key takeaways for Sub-Saharan Africa. There are 5 major takeaways or 5 major themes that multinationals need to think about over the next couple of years, or over the next year or so. The first is that most Sub-Saharan African markets, or all Sub-Saharan African markets, will exhibit very different growth trajectories over the next year or so. So we're going to see larger markets really struggling to regain their pre-COVID momentum, but smaller markets, especially in West and East Africa, will perform a lot better than both the Sub-Saharan Africa average, but also by global standards, they will perform very well. So that has implications for resource allocations across Sub-Saharan Africa for multinationals. We're also seeing elevated non-oil commodity prices supporting external demand, as well as generating pretty upbeat economic figures for certain markets across Sub-Saharan Africa. The global economic rebound has supported prices for some of Sub-Saharan Africa's main commodities, and this really does support the outlook. However, we have got a slightly different story for oil, and this will have a direct impact on countries like Nigeria, Angola, in terms of constraining economic growth, but it does actually contribute to lower inflation across the region. Another major trend that multinationals need to think about will be improved FX stability. So currencies had a difficult time last year. We're not going to see as much volatility this year, but there will nonetheless still remain challenges around the availability of foreign currency in certain markets, such as Nigeria, Angola, and Ethiopia. So ongoing difficulties there. We are certainly seeing elevated fiscal pressures across Sub-Saharan Africa. This will curtail public sector demand growth. It's one of the reasons why many markets are not growing as quickly as they otherwise would have, because we have seen long-standing public sector finance stress aggravated by the COVID-19 pandemic. But because of government responses in terms of austerity measures, as well as international support for African governments, we're not going to see significant fiscal crises or a debt crisis soon, in our view. And finally, we certainly have seen a very slow vaccine rollout across Sub-Saharan Africa. A lot of clients have been asking us what this means for the growth outlook. Will this disrupt the growth view? A very brief sort of answer to that is it certainly doesn't contribute, it doesn't help the growth outlook, but we don't think it's going to fundamentally derail the growth view. Nonetheless, we do expect certain segments, especially tourism and business travel, and certain B2B and B2C segments being directly affected and disrupted by this trend.